Welcome to computer-based accounting. In this video, we are going to discuss about setting up general ledger. That is your chapter 3 in this particular course. First, we'll look at what are the learning outcomes of this chapter. At the completion of this chapter, you should be able to explain how to restore a backup file or open a company file. So this is one of the important things. Basically, at the beginning of each chapter lecture, so you should be able to open the company that you have created. And basically, at the end of each lecture, you should be able to take a backup of what you have done during that particular day. So therefore, opening a company file at the beginning of the lecture and taking a backup at the end of the lecture is of utmost importance. So in the today's video, we'll be discussing about how to take the backups and how to open up a company. Then you should be able to explain the meaning of general ledger and its interactions with the other modules. In the sense, you have customer module, the suppliers module, the inventory module, as well as the general journal. So here we'll be looking at what would be the relationship, the interaction that the general ledger would have with the rest of the modules that you have. So it's a integrated package. So therefore you will be basically working in the separate modules. However, it is eventually get connected to the general ledger. Describe the principles relating to accounting numbering and coding. This is particularly useful. So when you'll be creating your ledger accounts, or we call it more technically the chart of accounts, so there you have to assign a number, or we call it coding. So you have to code all the ledger accounts that you have in the general ledger, or we call it, you have to code the chart of accounts. In this video, we'll be discussing how to code the chart of accounts and explain the different account types available in Sage 50. So here you'll be working with the assets, liabilities, equity, income, expenses. Under that, you'll be experiencing there will be different kinds of individual items are there. So in that, the sum of these items, so you can group the item. Say for an example, so if you take this PP items, so you can do a particular grouping. So if you take accumulator depreciation, it's another group. If you take trade receivable, so there may be a suitable category on which it would fit. So therefore there are some standard account types that is identified in this particular software package. So you have to familiar with that. We'll be looking at those aspects. And then explain how to create, modify and delete the chart of account. That is in the sense basically how to create the ledger account, how to modify, and eventually you need to know how to delete a ledger account even. We call it the chart of accounts. And finally, explain how to set default information relating to general ledger. So then we'll be looking at the default information of the general ledger. We'll be looking at the default information in the general ledger. So most importantly, we'll be discussing about the account segments. So when you take a particular business organization, there they can have several segments. So several business segments can be there. So therefore you need to know when it comes to assigning a particular kind of code. So how to create those codes, and also some rounding of accounts. You need to know this is basically what we call the default, the general ledger default. So we'll be looking at those aspects as well. Now we'll move on to the lecture. So here, first we are going to see how to restore your backup file. How to restore your backup file. So here, the path is very clearly given. So there will be different ways of restoring the backup file. So in that, the first method, we call it, you have to go to the file in the menu bar, then you can go to the restore, then you can browse, then you can select the destination, and then you can say open the backup. Then you will be directed to a particular dialog box. Then you have to click next. Then you may select new company and click new. So that is how basically we do, and this is the most easiest way to do that. Or otherwise, there is another method is also available, that is through the system navigation bar. Using the system navigation bar even you can access that. So let's explore this. So you have your backup that you had taken in the previous class, so therefore you have to select that backup. We have our software in place. So this would be the interface that you would see right after opening the particular software. So right after opening this peach tree, so this would be the window that you will be taking. Then in order to restore the file, so what you have to do, you have to go to the file. So in order to work in this backup, so you need to open it up. So therefore it is of utmost importance. So you may go to the file, then you can see, so there is a drop down menu. In that, the restore option is there. Restore option is there. So what you are going to do, you are going to restore your backup. So you can click on that. Then this is the restore wizard. So you are directed to a dialog box, that is your restore wizard. You are simply following the steps that it had mentioned earlier. Now you can select the browse option here, the browse, and then you can select the destination. In my case, I have this backup in the downloads, so I might go there and then I would select the backup. Then I would select the backup and say open. I would say open it. Then you have shown the location of your backup file. So in my case, it is user FMSC downloads and AFMA 2020. Then we can click next. And this is an important point. Once you come over here, so if you go through the instruction, there you've been requested to select the option a new company, right? This is particularly important. Remember, you have to take the option a new company. කරපුතාල මෙතන ටිකක් සැලකිලිමත් වෙන්න ඕනේ. එතකොට ගොඩක් වෙලාවට මෙතන අමතක වෙනවා. මේ existing company එකක් කියලා තියලා යනවා. ඒතකොට එහෙම තිබ්බොත් ඔයාලට පේනවා මෙතන company name එකක්, location එකක් කිසිම දෙයක් appear වෙන්නේ නැහැ. ඒතකොට අපි ඒකට කරන්න ඕනේ මොකක්ද? a new company කියන option එක ගන්න. Then you can see the relevant company name and the location gets appear in the relevant cage. The relevant cages, the company name and the location gets appear. Then you can click next. Then you can simply go by the default. So you want to get the company data. Say next. Then you have chosen to restore this backup file to a new company folder. Okay, then you can say finish. Then it would take some time to restore. Then it would open up. It may take some time, you may have to wait. Then it will open up the company that you had created. So this is how we restore a company. And remember, this is something pretty much required. Each and every day, when you open up this particular company, what you've been working in, you have to follow this step. You can't simply go and double click the backup and open. It is not possible, unlike in the other cases. So if you want to open up an Excel sheet what you've been working on, you can simply go to the destination and double click and open it up. The Word document, same. So even if you want to play a video, so that would be the case. You may go to the destination and you may simply double click, then it is open up using the relevant software. But here it is different. You have to take this particular path, and that is how you open up the company. So once you open it up, you can see some of the important changes take place. So in the title bar, you can see the name of your company. Name of your company can be seen. It is AFMA 2020 is there. Then you have this maintain. You can go to the maintain window and just to check is this the relevant backup, you can go to the company information and check. So this may be the case. Probably this would have been the information you would have set it earlier, right? So this would be the information you would have set in the previous class. So therefore we are in the right backup. Right. So that is the standard way of opening up the backup. Then also in your lecture handout there it suggests there's another way to open up the company. So let's say that now you are in AFMA 2020, that you want to have a separate company. So say that now you want to switch to the company that you create for the tutorial purpose, right? While you are in this particular interface, if you want to open up another company, another backup that you've been working for, then you don't have to necessarily go out from this particular system and follow the same path. That is need not. You don't have to close this and open it from the very beginning and restore the file the way we used to do. That is not. Even while you are in the same window, while you are in the same interface, you can open up another company. Then how do you do? So here you have to go to the system navigation bar. So the system navigation bar you have to go. So in this particular case, you can see the company is there. So you may go to the company. So once you go to this company, you can see that the company task gets appeared. Company tasks get appeared. Then there, most importantly, the data maintenance is there. Data maintenance is there. In that, what you want to do, you want to restore a backup. Then you can simply click on restore backup. Then again you are directed to the restore wizard. So what we had witnessed earlier. Then you can browse, show the destination and select whatever the backup that you want to open up. So I'm not going to open up the same backup, but so if you have a different backup, you can select that particular one, then say open and follow the same steps that you had followed earlier. Then that is another option available to restore the backup file. So now you know there are two steps or the two ways of how to open up the backup. So let me cancel this because we are in the right backup, right? Then if I go back to the lecture slide, there it says that once you have restored the backup file, you are ready to work. However, if you are working in the same computer, you can also open the company using the following steps, right? So if you are working in your personal computer, in order to restore, even you do not have to follow any of these steps. So there is different way of doing that, right? So let me show that as well. In order to go out of a company, so which you are working in, what you can do is you can simply click on file. You can say close the company. So once you click that, you are taking to the original window, what you would witness when you open up the software. So this is the opening window, right? So in order to go that, you have to close the company, then you'll be directed back to the original window. Then here, instead of taking this file restore option, you could have easily done one thing, because this may be the computer that you are working for. So therefore, there this particular software would recognize the backups that you've been working previously. So in order to get there, what you have to do, you have to go to this open an existing company, right? Not create a new company. You can go to open an existing company. You can take that particular option. Then see, here we have the backups, what we are working for, what we are working on, right? So the backups are there. Then you can select it from here, or otherwise just to confirm the location, you can take the browse option and you can select that. You can select the relevant backup. But here, if it is appearing, you can simply select it from over here as well. Then you can say OK. So once you say OK, so that particular backup gets open up. So that's it. You can go to the main pane and you can just check the company information. Yes, those information are there. And also make sure that one thing I can check on the chart of accounts. So chart of account, that has to be empty at the moment. Yes, there can't be anything. Yes. Right. So it suggests we are in the correct backup. We are in the correct backup because we have just created the company information. So only the company information must be there. Nothing other than that can be there. Nothing other than that can be there. So therefore I have verified myself that I'm in the right backup. I'm in the right backup. Right. Now we may move on with the lecture. So we have discussed about the first aspect. It is about how to restore the backup file. So at the end of the lecture, we'll be learning about how to take a backup. So now we have discussed about how to restore a backup, and at the end of the lecture, we'll be discussing about how to take a backup. So we'll be discussing that later. Right, now we come to a particularly important area, right? So this is I would say, one of the most important aspect. And the good thing is you are quite familiar with this particular aspect, but just to know how to operate this in a computerized accounting software. That is the extension that you will be getting here. But when it comes to the basic aspects, you know what is a general ledger and you know what types of accounts are there. Those are the basic things which I may need not to touch upon, because you are familiar with this since you are A-levels, right? Since you are A-levels, you are familiar with this. So therefore, let me simply go by the aspects that is relevant while you are working in the software package. It says that the general ledger store information relating to all financial activities of your company. All business transactions are eventually posted to the set of accounts that make up the general ledger. When it comes to a general ledger of a business organization, it would houses the many of the ledger accounts that you have. And simply putting, we define general ledger is the place where we keep the ledger accounts. General ledger is the place where we keep the ledger accounts. So when it comes to this general ledger, there you would see, there we can have thousands of ledger accounts. Depending on the business transaction, business operation, there we may be having thousands of ledger accounts. Thousands of ledger accounts. But how many number of ledger accounts are there? But eventually it relates to one of the categories, one of the elements of financial statements. That is in the sense, you may have thousands of accounts, but that must be either asset account or liability account or equity account or income account, or it may be expense account. So that would be the case. It would be of one of the 5 elements of financial statements, right? So that is a very basic thing what you know. Then when it comes to a kind of computerized environment, these ledger accounts, we call it chart of accounts, right? That is the most important thing that you need to know. We are not going to necessarily refer ledger accounts here, right? We are not going to always refer ledger accounts. That is not the case. Instead, what we would say, go to the chart of account. Then you need to visit to the general ledger accounts, right? So that is the important thing. So මේ computerized environment එක අපි මේවට මේ ledger accounts කියලා කියන වචනේ භාවිතා කරන්නේ නැහැ. ඒ වෙනුවට අපි භාවිතා කරන technical term එකක් තියෙනවා. මොකක්ද? අපි කියනවා ඒවට chart of accounts. Chart of accounts කියලා තමයි අපි කියන්නේ, right? නිසා ඒ term එකත් එක්ක මුලින්ම familiar වෙන්න. හැබැයි ඒකේ essence එක තමයි ledger accounts කියන එක. The general ledger help us to create the financial statements of the company. Once you record everything in the ledger accounts, eventually at the end of a particular period, you can extract a trial balance and thereby you can prepare the complete set of financial statements. Statement of profit or loss and other comprehensive income, statement of financial position, statement of changes in equity, even the cash flow statement. So therefore, general ledger would basically help you to extract a trial balance and prepare the financial statements. But when it comes to preparing this, extracting this trial balance and preparing financial statement in a manual environment would have taken you, say, probably like a period of 3 hours or something. In order to prepare the final accounts, in order to extract the trial balance, probably it would take at least 3 hours. It's a 3-hour job. Or even I would say that it would take you days, even in a practical organization, if you have to work for, right? Then the beauty of this computer-based accounting is you don't have to worry about any of these reports. So if you enter the transaction to this ledger accounts or the chart of accounts, if you update this chart of accounts, the beauty is at the end of the day or at the end of any particular period, you can easily generate all these financial statements just within few clicks. So that is the beauty of computerized accounting, computer-based accounting. That is the beauty. You can generate these financial statements in no time together with the trial balance. It's just a matter of few clicks. You have to go to the report section and select whatever the reports that you want, then the computer produces, right? So you don't have to even worry about that. So that is what you would experience over here. So we may explore these aspects later. It is important for us to set the chart of account properly to cover all the accounts needed to create the financial statements of the business. So therefore, when it comes to this chart of account, you have to make sure that all the necessary ledger accounts are there in the general ledger. So you have to create the chart of accounts. So it should be good enough for the preparation of financial statement. All the ledger account that it would require in preparing the financial statements has to be there in the general ledger. So it is something that you need to ensure. The chart of accounts consists of all the asset, liability, equity, income and expense account of the organization. As I mentioned, that has to be the case. Then, most importantly, when transactions are posted in accounts receivable, accounts payable, inventory and payroll, the journals are updated. So this is the most important aspect, right? As I mentioned earlier, you are working in an integrated software. In simple sense, you are working in separate or individual modules. The customer module, supplier module, inventory module. So in this course, we are not going to discuss about the payroll. So due to the time constraints, so we'll be basically looking at the three separate modules, the accounts receivable module, accounts payable module, and the inventory module. So when you are working in these individual modules, so basically that is how you do. You are working in the separate modules. When you work in these separate modules, once you post the transactions there, what happens is it will create the corresponding journals. It would create the corresponding journals. Through the journals, the general ledger gets updated. So that is the link which is there in this particular software package. At the very initial point, you have to establish the interrelationships. The interactions has to be initially set. Then thereafter, the transaction what you perform in these individual modules, the separate modules, it gets automatically update the general ledger. Then how do they do that? The corresponding journal entries are created once you work in these separate modules, and through that it gets update the general ledger. ඊට පුතාලා මෙතන තියෙන වැදගත්ම කාරණාවක් තමයි මේක integrated software එකක්. කියන්නේ මේ සෑම මොඩියුල් එකක්ම කනෙක්ට් වෙලා තියෙන්නේ general ledger එකට. ඒ නිසා අපි මේ individual modules වල වැඩ කරනකොට ඒ transactions post කරනකොට ඒත් එක්කම journal entry එකක් system එකෙන් create කරනවා. journal entry එකක් system එකෙන් automatically create කරනවා. ඒ තුලින් තමයි general ledger එක update කරන්නේ. general ledger එක update කරන්නේ. chart of accounts update වෙනවා. එතකොට අපි මුලින්ම මේ අපේ company එක create කරන අවස්ථාවේ මේ link එක establish කරලා දෙන්න ඕනේ. general ledger එක සහ individual modules අතර තියෙන link එක establish කරලා දෙන්න. එතකොට ඒක basically අපි කරන්නේ ඒ relevant opening balances equal වෙන්න ඕනේ. general ledger එකේ තියෙන අපි උදාහරණයක් ගමු trade receivables total එක අපේ account receivable වල තියෙන individual customers ලගේ balances වලට සමාන වෙන්න ඕනේ. ඒ සමානකම අපි ඇති කරන්න ඕනේ. එතකොට අපි refer කරන account එක account receivable කියන එක නිවැරදිව select වෙලා තියෙන්න ඕනේ මේ separate modules වල. එතකොට මේ link එක automatically establish වෙනවා. එතකොට අපි ඒව බලමු පසුවට. එතකොට ඒ වගේ මේ initial point එකේ අපි opening balances දාන වෙලාවට මේ general ledger එක සහ individual modules or separate modules අතර link එකක් හදලා දෙනවා. ඊට පස්සේ කිසිම ප්‍රශ්නයක් නැහැ. අපි transaction perform කරන විදිහට මේ separate module වලදී කෙලින්ම journal entry create කරනවා system එක. The software itself will create the journal entries and thereby it will update the general ledger. Not only that, even Yes, the journals in turn update the general ledger. This is what I said. And even so, there is option for you to work in the general journal even, right? So when you work in these accounts receivable, accounts payable, inventory, and even the payroll modules, the journals are created, journals are updated, and in that in turn it will update the general ledger. Even you have the option to generate the general journal entries separately. So you would see that for some transaction you may have to generate the journals. For example, the accruals prepayment, the depreciation, those aspects, the general journals has to be created on your own. So it is understood by the accounting software. So therefore, when you work in these general journals, even it gets linked to the general ledger, and the general ledger will update the relevant chart of account. The relevant ledger accounts get updated. Now we may see graphically what is the relationship between the separate modules and the general ledger. Then the story what I was telling you would be more convinced. Let's have a look at that. So this is what I've been referring. So here you have the separate modules. You can see the account receivable module is there, accounts payable, inventory, and even the payroll modules are there. And once you perform transactions in this, the journal entries would be created. This is something that the system itself or the software itself create. You don't have to worry about this. The system itself will create it, and thereby it will update the general ledger. It will update the general ledger. So all what you have to do is you have to just perform transactions in these separate modules. That is the requirement. That's all what you do. So once you do that, so it gets update the general ledger through the journal entry. And also in time to time you may require to produce some general journal entries depending on the non-routine transactions that you have, and in that so it gets also connected to the general ledger. The general ledger gets update in the way you have selected the posting method. If it is real time, then it gets update the general ledger real time. If it is a batch, so once you process the batch, it gets updated. So this is the most important thing what you need to understand. What you need to understand from the very beginning. You are working in the individual modules, then it will update the general ledger through the journals. As we are not using a sample chart of account, we need to create chart of account before any other activity. Right. Now we are done with the first aspects. We have discussed about the general ledger. Now we are moving on to the discussion of chart of accounts. So here the company what we are using, we are not using a sample company. So if you had used a sample company, there you would see there would be many more accounts. So there would be in fact almost all the accounts with a proper code. So you don't have to do much with respect to that. So if you are fine with the existing codes. But here you are going to do something on your own. So that is in the sense you are going to create your own set of chart of accounts. You are going to create your own set of ledger accounts or the chart of accounts. In that you need to know some of the important things there. Especially this accounting numbering is of utmost importance. The labels what you give is not necessarily read by the system. Say for an example, the company may not identify, the software may not identify something that you give as the motor vehicles, the something that you name as land and building. It may not necessarily identified by the software itself. So if you say trade receivables, no, it may not necessarily identified by the software. So therefore, in order to make it understood by the accounting software, you may have to do something called account numbering. Or more technically, we call it, you have to code the chart of accounts. You have to code the individual ledger account. You have to assign a code. And that code must be a meaningful one, thereby it is easily understood by the accounting software. And also, you have to select the appropriate type of the accounts, the ledger accounts or the chart of accounts together with this. And that is the most important aspects. Now we'll be looking at them in detail. So දැන් අපි පුතාලා කරන්න යන්නේ chart of accounts, ledger accounts create කිරීමේදී අපිට තියෙන අනිවාර්ය අවශ්‍යතාවයක් තමයි අපි මේවා properly number කරගන්න ඕනේ. එහෙම නැත්නම් code එකක් assign කරන්න ඕනේ. මේ ledger accounts වලට. ඇයි එහෙම වෙන්නේ? මොකද අපේ දැන් තියෙන වත්කමක් අපි ගත්තොත් උදාහරණයක් විදිහට motor vehicle. ඊට පස්සේ අපි ගන්නවා land and building. එතකොට current asset එකක් ගත්තොත් trade receivables, inventory. දැන් මේ වගේ කියන දේවල් අපි දන්නවා මොකක්ද මේක asset එකක්ද liability එකක්ද මොකක්ද කියන කාරණාව. නමුත් මේක system එකක්, computer based accounting software package එකක්. එතකොට එතනදී මේ කියන labels necessarily not identified by the software. software එක මේක නිවැරදිව identify කිරීමක් කරන්නේ නැති වෙන්න පුළුවන්. එතකොට ඒ නිසා තමයි අපි මේකට meaningful code එකක් දෙන්නේ. Code is, once you done appropriately do the coding, then it is understood by the software. Then it may do the needful with this, with respect of the chart of accounts. The Sage 50 allows the use of both numbers and characters in an account numbering. So when you are going to create or when you are going to develop a coding system, there you can use both the numbers as well as characters. So the alphanumerical values and together with the other characters you can use them there. So අපිට මෙතන numbers භාවිතා කරන්න පුළුවන්, අකුරු භාවිතා කරන්න පුළුවන්, ඒ වගේම විවිධ characters, ඉඩ දීලා තියෙන characters භාවිතා කරන්න පුළුවන්. However, an account numbering system should be established in an understandable manner. So this is what I was referring. So this has to be something, a meaningful context. This should provide a meaningful context. So otherwise, no point of adapting a numbering system. No point of adapting a coding system. So you have to make sure to the maximum possible these codes are meaningful. These codes are meaningful. So it should give you an understandable context. When developing a numbering system, it requires to follow generally accepted rules. So there are some generally accepted rules when you are developing the coding system, and we may look that later. The table 3.1 shows the starting number of different account types. Generally, when you are doing this, there is a standard numbers, standard starting number that we may use in most of the cases. In fact, if you take the chart of accounts, the sample chart of account, they would have followed these aspects to the maximum. In that, in most of the cases, I would say in almost all the cases, this would be the starting number of the different codes. For assets, you are using the code starting from number 1. So if you see in a chart of account, there is a particular chart of account that starts with number 1, you know by default it is something relating to the assets. මේ විදිහට තමයි සාමාන්‍යයෙන් තියෙන chart of accounts වල අපි use කරලා තියෙන්නේ. ඒකට sample company එකක් අරගෙන බැලුවොත් පුතාලා ඒතකොට number 1කින් පටන් ගන්න දේවල් අනිවාර්යයෙන්ම assets තමයි. Similarly, if you see the chart of account that starts with number 2, it would be the liabilities. Number 3, it would be the equity related things. And number 4, it would be the income. Number 5 represent the cost of capital, and from number 6 to 9 it may represent the expenses. And this is one of the standard system. So this is what you would witness in the Sage sample companies. If you take the sample companies, they have followed something similar to this, something exactly similar to this kind of format they would have followed. So in our case, remember, we are also going by this particular standard feature. So you have to make sure when you are creating the ledger accounts, if it is asset account, always remember to start that with number 1. Starts that with number 1. Then for liabilities, number 2. Equity, number 3. So therefore, we are creating a meaningful context, right? We always know now. So if we start with 1, it's asset account. Number 2, liability. Likewise, right? So you have to follow that. You have to decide the number of digits of an account code. So again, another important thing, once you agree on the starting number, then you have to think of how many numbers has to be there. Is it 4 digits, or is it 5 digits, or is it 3 digits, something like that. So you can decide a code like 100. So there you have 3 digits. Or you may decide a code like 3 zeros, 1 and 3 zeros. So it is 1000. So there are 4 digits. Even you can take 10,000, the 5 digits, likewise. But whatever the number of digits that you may want, it depends on the requirements of the business or the size of the business, right? So depending on the number of accounts that you may have in a particular organization, then you can decide. So what would be the proper number of digits that it must be there in the account code. So for an example, if you go by 3 digits, if you start asset from 100, then you can go up to maximum 199, right? So therefore you can set 99 account. There can be business organization, they can manage all their assets with 99 accounts. If that is the case, your code may be having 3 digits would be good enough. But in contrast, there can be a company who would require like thousands of accounts for ledger, thousands of accounts for assets. So that particular kind of business organization, a code of 4 digits would be more meaningful. So they take 1000 as the code, then they can go up to, for assets, 1999. So then there they have roughly 1000 accounts. They can use 1000 accounts for assets, because you can't take 2, because the 2 denotes the liabilities. 2 denotes the liabilities. So therefore the number of digits will depend on the existing and future requirements of the accounting system. So you have to ensure that. Right, we have discussed about the starting number, so that is particularly important. And as I highlighted, the Sage 50 sample companies use numbering scheme similar to those in the table above. So as I told you, if you refer to any of the sample companies that is given in the Sage 50, there you would witness a code, the accounting number that starts with the number 1 for assets, 2 for liabilities, 3 for equity, 4 for income, likewise. So the standard set of starting number would have been made use. As we choose not to use a sample chart of accounts, there are a few other rules and guidelines that should be followed when an accounting numbering system is established. But here, as I mentioned even earlier, we are not going by the sample chart of accounts. Instead, what we thought of creating our own set of accounts. We thought of creating our own set of chart of account. In that, we need to know some of the general guidelines that is applicable when you are creating the number. So we'll see what those are. The first requirement is you can go up to 15 characters. So 15 alphanumeric characters. You can use the numbers and the words. Numbers and the words together with the other allowed characters. Can be used in an account ID, and the asterisk and question mark plus sign cannot be used in an account ID. So though you can use some of the characters like asterisk mark, question mark and the plus signs is not allowed. You can't use them under any circumstances. And leading or trailing spaces are not permitted in an account ID. The spaces from the beginning, spaces from the end is not allowed. You can't keep the spaces from the beginning and at the end when you are creating the account ID. However, the spaces between the characters are allowed. You can have spaces in between the characters, but not from the beginning, not from the end. Leading or trailing spaces are not allowed. And account numbers are sorted alphabetically. This is also important, with numbers in the account ID sorted before the letter. So here, always the numbers get the priority. Numbers get the priority. So if you have, say for an example, 1000, the 1000 should comes before 2000 or 2. Because, so the one comes first and then the second. And also, when come to a kind of account ID, let's say that it starts with A, it comes even after 2. Why is that? Because it was said that the numbers are getting the priority. Numbers are getting the priority. So first, once the number is over, then you may go to the words. Words starting from A to Z. That's how it goes. So therefore here it says, for example, account ID 2 list after the account ID 1000. Because the starting number is 1. 1 gets first and 2 comes next. And before an account ID with AR. So if you have account ID called starting from A, it would comes after all the numbers. So the 1000 is there in this situation, then 2 is there, then thereafter AR comes. The account numbers are not case sensitive. That is another important feature. So here it is not case sensitive. So if you use cash in upper cases, so if you use cash in lower cases, it doesn't make any difference. Those are not case sensitive. It is not case sensitive. So it does not affect the priority. It does not affect the priority. The case, it is not case sensitive. And also, this is the one of the most important thing when you are creating your own set of chart of accounts. At any given moment, you have to make sure that there can only be one account assigned an account type of equity retained earnings. Hereafter we are going to discuss about the different account types that you have. In that you would witness that you can have only one account type called equity retained earnings. This is particularly an area the things may go wrong in case of your examination, in case of your midterm examination. So this is one of the features that we had seen in most of the time. You do not confine yourself to one retained earning account. It's a requirement of the software. In fact, it's a requirement of the preparing financial statements. So you have to make sure that you are having only one equity retained earning. It is that much of important, right? Remember, that is the case. So we may look more into this when we are discussing about the account types. Then it will make more sense, right? දැන්ට මතක තියාගන්න පුතාලා equity retained earning කියලා අපිට තියෙන්න පුළුවන් එකම එක category එකක් විතරයි, right? So it is of utmost importance. Now let's look at the account types. So we have discussed about the numbering or coding of chart of accounts. Now we are going to decide about the different types of, now we are going to explore the different types of chart of accounts, different types of ledger accounts that is there in this computer based software package. But if we talk generally, basically we have 5 types of accounts now. If you take a general ledger, we have 5 types. What those 5 types are? Assets, liability, equity, income and expenses. Those would be the standard types. In that, since you are in the second year, you would know that you would be having several, you would have exposed yourself to several accounting standards. So in that you would know that there would be different types of assets, different types of liability, different types of income and different types of expenses. So therefore, if you take the assets, in there there would be asset types like PP. PP is one type of asset. Then the intangibles, that is another type. The investment property, that is another. Inventory, that is another category. Financial asset. So in advanced courses you may learn. So it is an asset that represents the right to receive cash. For example, trade receivables. Likewise. So even if you take the liabilities, you would see different categories. The financial liabilities, the obligation to deliver cash, like trade payables, and provisions. Then there would be some statutory related liabilities like income tax payable, the VAT payable, things like that. So similarly, if you take even the income, there would be different kinds. The revenue is there. And there would be other types of income. If you take expenses, you may go by the classification administrative related expenses, the distribution expenses, likewise. So the point what I wanted to make here, that when you take this standard set of elements of financial statement, that is in the sense when you take these assets, liabilities, equity, income, expenses, there are different kinds of types of items are there. The types of assets, the types of liabilities, types of equity, types of income and types of expenses are there. So similarly, that fact is similarly applicable for this computer-based accounting software. In this software itself, they do some kind of classification of these elements of financial statements. They do a kind of classification that may correspond with the most of the accounting principles. In line with the accounting principles, they do a kind of classification as it is required for this software. Now we are going to learn about what those particular categories of elements of financial statements. That is what we are going to learn now. It says that the account types are used to group similar accounts together. Say for an example, so if you use the accounting category, say expenses, then all the expenses can be there. Administrative expenses, distribution expenses, all these expenses can be there. And if you take category, say called fixed asset, so it is one of the categories here we witness. The fixed asset, we are using the term non-current assets, right? If you take non-current assets or the fixed asset, so here they would refer that to the PP items. PP items, they would take this fixed asset category. Likewise, the account types are used to group similar accounts together. They also determine where the account will appear on financial statement. The most important requirement is this grouping will decide where it is going to get appeared in the financial statement. So if you take an asset category like fixed asset, it will probably shown under the non-current asset. If you take asset category like inventory, it will definitely show under the current asset. Likewise, it will decide where it needs to appear. Similarly, when it comes to the expenses, they would take expenses to the statement of profit or loss. When it comes to the liabilities, they would take these liabilities to the statement of financial position. Likewise, right? They would know where it is to be taken. It depends on the account type that you specify. It purely depends on the type that you specify. So therefore, it is particularly important for you to assign a proper account type. Whether the account typically carries, and also whether the account typically carries a debit or credit balance. So this account types is particularly important to decide where it should appear in the financial statement, as well as whether it typically carries a debit balance or credit balance. That is also something that this account types would help with. So if you take a kind of asset like fixed asset, so you know probably there is a debit balance. There's debit balance. If you take something like trade receivable, typically there would be a debit balance. Trade payables, typically there would be a credit balance. Likewise, the Sage 50 has a variety of account types available. As I mentioned, here they identifies several account types. You need to be familiar with that. In order to work in this system, that is something that you need to become more familiar. So these are the fundamentals that you would need to know from the very beginning. At the end of the fiscal year, the balances of the income, expenses, cost of sales and equity gets closed account type become zero, right? So know this fact very clearly. You know that when you're operating a system manually, you know the income, expenses, cost of sales, all these things we take them to the statement of profit or loss. Then what you did? You identified the profit or loss for the period, considering the income and expenses. Thereafter, that profit or loss was taken to the statement of changes in equity. And also, there you would have considered the drawings as well. So if it is a sole proprietorship, you would have taken the drawings to the statement of changes in equity. You would have taken the profit or loss and the drawings. If it is a company, so you would know the profit or loss is taken and also the dividends paid is taken. Then eventually, if you can remember where this profit and dividends paid are taken, that is eventually taken to the retained earnings. When you are preparing statement of financial position, you are taking the final balance of the retained earning. That is what you used to do when you are doing it manually. So therefore, when it comes to this computer-based software package, they do something similar to this. When they are preparing year-end financial statements, they need to make sure that all the income, expense and cost of sales account, the things that was considered in calculating the profit, those account balances become zero. They will close the ledger accounts, they will close the chart of accounts, and that will get to the retained earning, right? That would get to the retained earning. That's why it says income, expense and cost of sales account types become zero, because those are income and expenses. The income and expenses accounts will eventually get closed and it will be taken to the retained earnings. So therefore, you need to make sure that, so when it comes to the preparation of year-end financial statements, so these income expenses should become zero. Together with that, I have shown you that when it comes to the statement of changes in equity, the dividend paid is also taken. It is eventually go to the retained earning, you know. If that is the case, if you have dividend in the question that you would consider, it is a type of account, we call it equity gets closed. Equity gets closed. That is the appropriate category for, or the type for, the dividend paid account. So if you have dividend paid ledger account, the type of that ledger account is equity gets closed. Equity gets closed, right? Later we may discuss that and why it gets closed, because it eventually need to go to the retained earning. So therefore, simply putting, income expenses and the drawings account or the dividend account balances need to become zero because it goes to the equity retained earning. The net difference of these accounts is added to the equity retained earning. So this is what I was telling you. The balances of other accounts, asset, liabilities, equity doesn't close, are carried forward to the next financial period. You know, asset, liabilities and equity doesn't get closed. What those categories? Equity doesn't get closed. There you have, if you have that share capital, so it's a typical account that the equity doesn't close. Equity doesn't close. The equity retained earnings, everything goes to the next reporting period. Next reporting period. The table 3.2 shows the account types available in Sage with examples. We may see these are the account types, available account types in Sage. We may discuss this later, right? So here we have the account types such as accounts payable. There's a one type of account is accounts payable. So just to give you an example, if you have creditors account, it's a accounts payable category. It belongs to the accounts payable. Similarly, if you have debtors, it is account receivable. Accumulator depreciation, you may be having many of the assets, so it belongs to the accumulator depreciation category. It's a standard category. Cash in hand, cash at bank, we have the type cash. Cost of sales, type cost of sale. It is not expense, right? Remember, this is particularly important. Cost of sales category is cost of sale. And you have capital, the different. So if it is sole proprietorship, you have the capital. If it is a company, you have stated capital. And this is the category, we call it equity doesn't close. Equity doesn't close, right? And drawings and dividends. Drawings and dividends, as I mentioned earlier, it is the equity gets closed. So these are some important aspects, right? So these are the things that you have to be very clear with. The cost of sales, equity doesn't close and equity gets closed. And most importantly, even you have seen that when we are discussing about the numbering, there must be one account type called equity retained earning. For the retained earning, the type is equity retained earning. Then salaries and rent, obvious expenses. Building furniture, the PPE, we use the term fixed asset. Why is that? It's a kind of US based accounting software. So they are so used to the term fixed asset rather than saying PPE. So therefore this is basically PPE. Then sales, other income, those are income. Inventory, inventory. If you have bank loans and debentures, we call it long term. We do not use this term as per the SLFRSs. We use the term non-current assets, but here we use the term, we have to go by the term long-term liabilities. And if you have some assets like goodwills and brand name, basically the intangibles, intangible assets, the goodwill can come into the picture if you are going by the consolidated financial statements. In that, you would see the other assets are there. So the category for these intangibles could be the other assets. Then other current assets, the prepayment and other receivables would be other current assets. Then accruals and other payables, that would be other current liabilities. This would be the thing that you need to remember throughout this particular course. Actually, you need not to remember that. You can make some sense, you can make some logic here. You can see the kind of logic is there. Then in compliance with the logic, you can remember this. You don't have to put an extra effort. So these are some of the obvious things. Because you are from an accounting background, this may make perfect sense. I believe this would make perfect sense to you. We may discuss a little in detail of these categories as well, but even I believe at this point in time, it would make some sense to you, right? Okay, good. Let's see each account type is described in the following section. We have accounts payable. This represents the balance owed to vendors for goods, suppliers and services. So simply it is trade receivable things, no? Trade payables related items. Accounts payable balances are used in accrual based accounting and generally during 30 to 60 days. So when you do the transactions on credit, so you would allow your customer, you are allowed from your suppliers to pay the money in a later point in time. Generally, you are given a credit period of 30 to 60 days. Select this type of account if you are setting up open vendor account or credit card accounts. So simply putting, for the trade payables, the relevant category is accounts payable. For the accounts receivable, this represents the amount owed by customers for items or services sold to them when cash is not received at the time of sale. So simply trade receivables. Typical account receivable balance are recorded on the sales invoices. So you would record the sales invoices in the accounts receivables module, and there you would see this outstanding balances, and that is the account receivable. Account receivables are used in accrual based accounting. Select this account type if you are setting up accrued income that customers owe. So in this particular case, simply putting, if you have trade receivables, the category is relevant category is account receivable. Then you have accumulator depreciation. This is more or less you are familiar with. This is a contra asset to depreciable asset, fixed asset such as building machinery and equipment. Depreciable basis expense is the difference between the asset's cost and its estimated salvage value. So depreciable basis in the sense what we call that depreciable amount. They use the term depreciable basis, right? Recording depreciation is a way to indicate that assets have declined in service potential. So the depreciation would represent the reduction in the service potential during a particular period. Accumulated depreciation represents the total depreciation taken to date on the asset. Select this account type if you are setting up depreciation accounts for non-fixed asset. Accumulated depreciation, the category is accumulated depreciation. Cash. This represents the deposits in the bank available for current operation plus cash on hand. Consists of currency, undeposited checks, draft, money orders. Select this account type if you are setting up bank checking account and petty cash accounts, money market accounts and certificates of deposits. For the cash items, the cash in hand and cash in bank is the category cash. Cost of sales. This represents the known cost to your business for items or services when sold to customers. Cost of sales. This is particularly important. So you have a separate category for cost of sales. Then most importantly, the equity doesn't close. This represents the equity that is carried forward from year to year, like ordinary share capital, or if it is sole proprietorship, the capital. Equity is the owner's claim against the asset or the owner's interest in the entity. These accounts are typically found in corporation type business. Corporation is the term what the US is using for the companies. In USA, for the companies, they use the term corporation. So that's why it says corporation type businesses. It is simply the company. Select this account type if you are a corporation and want to record ordinary shares or other equity intended as owner investment. It is simply the share capital. Equity gets closed. If it is a proprietorship, you may be having that, the drawings. If it is a company, you may be having that, what we call the dividends. So that is what the equity gets closed category. This represents the equity that is zeroed out at the end of the fiscal year. The most important thing is, the equity that represent here, the drawings or the dividends what you have in these accounts will eventually gets closed, because at the end of the day it is taken to the retained earning. It is taken against the retained earning with the amounts moved to the retained earnings account. Equity, also known as capital or net worth, are owners' claims against assets they contributed to the business. Select this account type if your business is a proprietorship and you want to record dividend paid to partners, or if you are corporation and want to record dividend paid to stockholders. So the dividend paid to partners, in the sense, even for the partnership, even for the owners, so that would be the case. We use the term drawings. And when we come to a company context, we use the term dividend that is paid to shareholders. They call it stockholders. So the terminology may be slightly different, but the content should be exactly the same. Simply putting, drawings and dividends, the relevant categories, equity gets closed. As the term suggests, this account at the end of the day, at the end of the period, becomes zeroed out and it is transferred to the balances are transferred to the retained earnings. Equity retained earning. This is one of the most important thing. You have to make sure that you have only one retained earning account. One retained earning account in this software package. This represents the earned capital of the entity. Its balances is the cumulative lifetime earnings of the company and that have not been distributed to the owner. It has not been distributed, it has been accumulated, and you can have only one equity retained earnings. Then you have the expenses. These expenses represent the cost and liabilities incurred to produce revenue, assets surrendered or consumed when serving customers indicate the company expenses. If income exceeds the expenses, the net income will result. If expense exceed income, the business is said to operate at a net loss. So here it talks about how the profit is worked out. So it is a matter of income minus expenses. So you know easily how to pick these expenses. Select this type if you are setting up accounts such as operation expenses, supplies expenses, salaries and wages expenses, travel expenses, or charity expenses. So that would be the case for the expenses. Then you have the fixed asset. This represents the property, plant and equipment asset that are acquired to be used in the business rather than for resale. You may acquire these PPE to be used in the business operation. In the context of this accounting software, we use the term fixed asset to refer them. It is not the what we call the PPE, we use the term fixed asset. You can have land, building and machinery. So these are some examples for that. Then you have the income category. It represents the income. You may set this for the sales and other income. To represent the inflow of assets resulting from the sale of product or services. Then if the income exceed the expenses, there is a profit. If expense exceed the income, there is a loss. Select this account type if you are setting up the sales revenue account. And common practice to create different income accounts for each category of revenue. For example, retail income 1, service income 1, interest income. Likewise, this is the standard kind of practice. You may be setting up different kinds of income accounts for different kinds of revenue that you have. Then you have the inventory. This represents the quantity of goods on hand and available for sale at any given time. Inventory is considered to be asset that is purchased, manufactured and sold to customers for revenue. So you can have different kinds of inventories, like raw materials to the work in progress to the finished goods to the consumables. Everything is at the end of the day is inventory. Then you have long-term liability. This represents those debts that are not due for a relatively long period of time, usually more than 1 year. So these loans that it takes long period of time for the settlement, that it would allow a long period of time for the settlement, we call it the long-term loans. The proportion of long-term loans due and notes payable with maturity date at least 1 year or more beyond the current balance sheet date are considered to be long-term loans. Select this account type if you are setting up loans, the long-term loans and non-current notes like Debentures, this would be the proper category. So you can leisurely read this and understand, it is easily understood. Then you have other assets. This represent those assets that are considered non-working capital, that are not due for a relatively long period of time. So in other words, these are the other non-current assets. Notes receivable with maturity date at least 1 year or more beyond the current balance sheet date are considered to be non-current asset. Select this account type if you are setting up assets such as deposit, the non-current assets like investment, if you have investment, and if you have intangibles, and if you have whatever the non-current assets that is not PPE, say investment property, everything is other asset. Simply putting, this equal to other non-current asset. Non-current assets other than PPE. That is the easiest way to remember. Other current asset. This represents those assets that are considered non-working capital and are due within short period of time. So as the term suggests, those represent the current assets, usually less than a year. Prepaid expenses, employee advances, the short-term investment, everything can be there. So other than the working capital. The trade receivables, inventory, those are separate categories, but the non-working capital, that is short-term, is other current assets. So you can consider about this particular category. In other words, you can say this is other current assets as the term suggests. That would be the case. Then other current liabilities, this represent those debts that are due within short period of time, usually less than a year, right? The accrued expenses, the short-term loans that you have, those are basically the other current liabilities. Right, that would be the different kinds of account types that you would have in this particular case. So if I just go back to the previous table, so this would provide you with a comprehensive understanding. You can read the content. Once you read that content, this particular table would make more sense. So whenever you are working out a particular question, if you are not comfortable at the initial stage, you may come back and refer to this table, and you must be able to generate the required or the proper category there. So it is a requirement. So at the initial stage, it would take you some time to come up with the precise category, but in just matter of 1 to 2 practices, you would make perfect sense out of this. You would make perfect sense out of this. Then we'll have to discuss about the setting up the chart of account for the first time.